right? So on GBP USD, what we're basically seeing, let's focus from this vertical line, right? Come over to here. What we're basically seeing is the data, right? So right here, the blue candles meaning it's going up. The value is appreciated. So we see the market push up, push to this green line, that's the highest point. It come back, push this right here, that's the lowest point, and it push up again, right? Since the 31st of May, this vertical line now, what we could clearly see is the market pushing down, pulling back, pushing down, pulling back, pushing down. Therefore, the overall perspective of the market from March 31st to December 6th is a downtrend. Therefore, if we're looking to take a trade here, we're looking to trade with a trend because that's how we make money. We make money by trading in the direction that the most money is flowing in. The market is bearish, right? So let's focus on price from here to here. I'm trying to keep it as simple as possible, right? So with the market trading bearish, we clearly saw that we have a trend line right here, right? Every time the market meets that level.
Yeah, I think he's having some internet issues. Oh, he's back.
Jakim?
Are you guys hearing me now?
Yeah, we're hearing you.
All right, sorry about that. Let me go back and share my screen. Where did I lose you guys?
Trend line.
See my screen?
Yeah.
All right, trying to keep it as simple as possible. Again, we realize that we have a trend line right here. Every time the market meets the trend line, it fails to go higher and push lower. Then we have a support meaning a floor. And there's a floor here because buyers stepped into the market here. Why does buyers step into the market? If we look at historical data, as we know, history tends to repeat itself. We realize the last time the market was over here, it made a rally to the upside. Therefore, what is the probability that when the market comes back to the same level that repeats? There's a higher probability, and that is exactly what we saw happen right here, right? So focusing on price actions from this vertical line to here, we realize that we created a lower high and a lower low, right? This is a lower high, meaning this high is lower than the previous high, and this is a lower low, meaning this low is lower than the previous low, right? And we found demand, meaning individuals that saw the price as cheap and they bought it back up to here, right? So upon us seeing the market push back up now, we realized something happened for the first time that didn't happen before. We actually broke above the trend line. So upon us breaking above the trend line now, we could possibly state that, hey, there's a probability that the market is changing from a downtrend to an uptrend, right? So that's the information that we have thus far on the weekly time frame, right? Upon the weekly time frame now, we could now break down that information to see what's happening on a smaller time frame, right? So on a smaller time frame, what we realize is that after the market found support here, it pushed up. Before the market created this low, the lowest point, it had this high. So this was the highest point before the market created the lowest point. So this is the ceiling. This is the highest point of trading activity before it created the lowest point. So what we did, we pull back, meaning the market push up, break past the level, pull back and went higher. So upon it going higher now, we realize that, hey, there's a probability that the market is transitioning to the upside. So the market pushed back up now and found resistance, ceiling, meaning price at which the market is failing to break above. And then we found sellers, right? We found sellers right in here. So let's take a look at this again. We found sellers in here due to the fact that we realized nobody wanted to push the price past this level, right? And we have red. So we have more red than blue. Therefore, the market is pushing back down. So upon the market pushing back down now, it come back to the same level of support. So really and truly what we're doing is that we're analyzing the candles. We realize that it's repetition. All of this is repetition, repeating ourselves to see where we could possibly get an entry opportunity where we can enter the market to be on the right side, meaning entering the market on a level where it continues in our favor. So upon the market pushing down now, we realize that this is a level of support. What we did, we break the level of support, right? Upon breaking the level of support, the next level of support is this line down here, right? So upon us breaking that level of support now, we could go to a smaller time frame to see what's happening, right? Upon us seeing that the market break below this red area, what occurred is that, let me show you a quick replay right here. Upon us seeing this red candle, let me highlight the candle for you guys. Upon us seeing this red candle come and close outside of this red box, we realize that we have an empty space and the next floor is right here. Therefore, what we're saying is that once the market stays below here, next level it's going to is here, because we realize that the market is basically making a downward push. This is it. Right, so we realize the market is going down, it breaks past a level, a floor, and the next level is down here. Therefore, now we have an empty space. So what we want to do, we want to take a trade here, speculating of the fact that the market will continue its downward move and fill the empty space, right? So with us seeing that on the 4 hour, meaning each candle is 4 hours worth of information, what we then realize is that, what we realize after that is that the market pushed down. And so the market pushed down and it went back up into the blue area. Upon it going back up into the blue area, we then realize that there are more sellers than buyers from that same area right here. Let's highlight it. We realize right into this area after we break past this level. Let me use a drawing tool real quick. After we break past this red box, the market tried to push up, failed to go higher, push up, failed to go higher, and then we have more sellers than buyers in a downtrend. If we have more sellers than buyers and the market is pushing down, this is where we want to enter, right? So what we did, we enter here and we put our stop loss above here. Our stop loss meaning if the market should go in the opposite direction of where we want to end the trade to go, and it comes back up here, it means that we take a loss and it automatically kicks us out of the trade. So this is a trading opportunity that I did take. I showed you on the screen just a while ago. My entry was 1.3568, right? And my target is 1.3530. So all I would do now is wait until the market either hits my target or hits my stop loss. And that's a trading opportunity.
Oh yes. Zella! Sin. Check out my swag, you know when you win. Anything me touch, any style a man bring, that's Zella.